my dear friends. My name is Balaji. Our channel is called Index Smart Level. Today is March 20th, 2026, a Friday. And today we won't be doing any post-market analysis. You see, today we're definitely in a range-bound market. The market actually opened with a significant gap up, and then it came all the way down from the ORB high to the ORB low. So if you take a look at the chart, specifically the put chart, you'll notice it has retested our previous day's low. So that's the main thing we need to discuss. Also, in today's video, what we are going to be doing is we're planning to explain our indicator in a little more detail. So where exactly should we be taking the main entry? So we already know where the exit point is, but at what specific point should we be making our entry? And sometimes people don't know how to find the exit. They're asking where exactly the main entry and the exit points are and how to properly exit. So to explain all of that much more clearly, we've created this video for you. Please make sure to watch this video until the very end. It will definitely be very useful for you. All right, let's get into the video. So first, we'll completely explain what all is in our indicator and how it's going to work. Okay. So our indicator, as you can see, will look exactly like this. Now, if you take a look, our indicator's official name is ORB Smart Level Manager. All right. And what you'll notice here is the very first 5-minute candle appearing. So as soon as this candle forms, we'll be looking specifically at the very first 5-minute candle of the day. Now you'll observe that the market could potentially open with a significant gap up or perhaps a notable gap down, or it might even just have a flat opening. So you would have already marked out 3 distinct resistance levels or 3 crucial support levels from the previous day's trading activity. All right, if the following day opens with a significant gap up or a substantial gap down, it will either trade above that resistance level or below the support level. Following that, you'll essentially be trading the market's direction completely blind. So what our indicator shows is that no matter where the market opens, you can actually see this for yourself very recently. For example, just yesterday, it opened with a 2% gap down. And then prior to that, it had opened with a 1% gap up. So there are many such scenarios, you see. So in situations like this, wherever the market opens, all the target lines along with every support and resistance level will be automatically marked for us from that very point. This entire process happens completely automatically. You won't need to perform any of these crucial actions manually at all. The only thing that you will actually have to do manually is this table. Do you see it right here? So this here is the alert strike table. Please take a look at the expiry dates in this table. You'll need to go into the expiry date setting and make sure to update these expiry dates once every week, then save them as your default. So it's crucial that you keep these expiry dates accurate, as only then will your option chart function correctly. All your plot levels will also work properly. If you happen to set the expiry date incorrectly, the plot levels simply won't display. Understood? So I'll be explaining everything to you step by step, one by one. Okay, so initially in the first 5 minutes, as soon as this candle closes, we will have a 5-minute high and a 15-minute low. If the market is bullish, we'll consider the 15-minute low. If it's bearish, then the 5-minute high. When the market is in a bullish trend, you will observe a 15-minute low and a 5-minute high. Conversely, if the market is bearish, a 15-minute high and a 5-minute low will then appear. Therefore, that specific line will be the first to materialize. Following that, the 15-minute line will subsequently appear. Immediately after the completion of this initial 5-minute candle, your crucial target lines will become visible. T1 and T1 will be positioned on this side, boss, and on this other side, you'll have T1, boss. So you will receive target lines on both sides. Understood? So after that, we have these values, the high, the low, and the close. You see here, right? The high, the close, and then the low. Do you understand? This is a self level. This chart, the market's 5-minute candle, will appear even before it actually starts. All these values represent yesterday's high, low, and close, right? So we have the high, the low, and the close. And then also the previous day's high, low, and close. You will see something like previous high and previous low listed there. Then you'll have previous low and previous high. All right, this includes yesterday's low, yesterday's high, its low, and its close. Also the day before yesterday's high, low, and close values. So both of these data points will appear right at the market's opening. It will show all this information to you well in advance. The 5-minute candle needn't close. It'll come early. So once 5 minutes past, the 5-minute high and low will show. 15 minutes. Once 5 minutes have passed, it will show the 5-minute high and low points. Target 1 and target 1, both of these will be displayed. All right, 15 minutes. Once the market's 15-minute period is complete, you will have a 15-minute high and a 15-minute low. Whichever of the 5-minute low or 5-minute high supersedes the other, that will then be replaced. Now in this instance, the 5-minute low and the 15-minute low are identical. So the 15-minute low was established. Here the 5-minute high is different. 15 minutes high is also quite different. So it will display both of them. This particular difference will be present right here. If both of them are exactly the same, it will show the 15-minute high in this specific spot. It will show the 15-minute high. Next, you will have your levels right here. L1 will then appear. Okay. The level, what it is that our indicator is based on the ORB concept. It's ORB plus a smart level manager. So there will be complete details about ORB. So ORB plus, this level is essentially a multiple line derived from 15 minutes. That's ORB. So these are the levels we're talking about. This level 1 specifically is a direct multiple of 15 minutes. On the upper side, it will clearly indicate level 1, and on the lower side, it will clearly indicate level 1. Then immediately after those 15 minutes are completed, what you'll see next is this MUL. What exactly is MUL? It actually means maximum upper level. Is that clear to you? And similarly, if you look below, you'll find what we call MDL. MDL in full stands for maximum down level. What this essentially means is that the entire market operates completely and solely based on mathematical principles. You see, everything is a precise calculation. So we have developed and implemented a specific calculation for this purpose. This particular one is an average calculation. You will clearly understand its effectiveness and how it works if you take a moment to examine its trading history. So the market will trade exactly within that range. Otherwise, the market will simply touch that line and remain there. Even if it breaks past it or just shows a break, when the market eventually closes, it will always come back and settle near that line. So this is an average mathematical calculation. This line gets plotted for us. So right after the initial few minutes have passed, we will immediately get both the MUL line and the MDL line. This is the specific range. The calculation is that the market will trade within this particular range for the entire day. Now, if you observe this MDL, you'll notice there are two distinct lines here below. And then if you look up here, there's one line. And from that point, another one deviates and moves away. So what exactly is the difference here? Currently, this specific line that we are observing is calculated purely based on the 15-minute high and low values. Let's say, for instance, that a noticeable difference emerges in that 15-minute high and low range. A significant change has then occurred. Consequently, for us, the line will automatically adjust itself right here. For example, if the 15-minute high point is broken through and a new higher high is established right here. Understood? So we had a 15-minute high established. This 15-minute high came all the way up to this level. The very moment this high point shifted, our slope target immediately changed. So this is what we consider to be our original level. Because of this significant high change, our level here will definitely shift. And similarly, if you observe this particular spot, we have established a peak. So because of placing this peak and that peak, this peak changed here. So it will adjust here for us according to that level. In this, there are two people. This is their target. If we were to put it precisely, this right here is our primary base target. Do you understand? That, of course, is contingent upon the market's potential. And the market, as of today, is exhibiting very high potential. We'll reach up to the original MUL, MDL. Otherwise, if the potential isn't that high, it'll be tough for us to even reach this level. Our target will stop short of that, right? So when there is such a moderate range, it will come up to that revised line for us. So I will tell you one by one, all right? Okay, so if you observe here, what we have is a low level. This is specifically the 15-minute low point. So because of that, it will remain continuous right here. Our low has changed at this point. So as soon as this moment changes, our revised line will appear here. So that's everything for now, MUL and MDL. Is that understood? I have already explained this part. Now, what other things do we have available in our indicator? So if you look here, this is the market status table. And in this, you'll see the day's status. Regarding the day's status, we are presented with bear trending, bull trending, bear range, bull range, full range, and then strong bear and strong bull. We have all these numerous categories available to us. So the market condition will be very clearly displayed and indicated right here in this particular section. Okay, so what about the 2-hour range? What about the 1-hour range? What about the 15-minute range? Okay, all of this will clearly indicate its range right here. Moving on, we have the RSI. All right, the specific condition we've established is that when the RSI remains in a neutral position, it will display as green. And for instance, if it becomes either oversold or overbought, we've configured it to change to a distinct red color right here. When we notice that red, it immediately captures our attention. You see what I mean? So that's precisely the concept I've implemented here. So next, we'll check our market status table. The main thing that needs our attention is IDX. As soon as our market opens, the first thing we need to look at is ADX. Okay, I'll tell you more about that when we get to the trade. First, let me explain what all is there. It will be ADX. So in ADX, we have choppier trending. Will that particular day be choppy and that's fall? Meaning, will it be range bound or will it be trending? The indicator will show us that right here. And after that, is there volume or not? This is a volume spreader. So the volume spreader here will indicate high volume or no volume. High volume, if there is volume, it will show high volume. If there's no volume or if it's not volume, it will show no volume. SMC stands for smart money concept. So this is what indicates bias. It indicates whether the market is biased upwards or biased downwards, or if it's going to be in a range. So if you look here, it's clearly showing a range. The IDX today is showing chop. So from that alone, I immediately understood that today will be full consolidation. Momentum, it's basically like this. At that specific time, what kind of momentum the market is showing, whether it's positive or negative. So it will display that information right here. This you see is the pattern. What we call a pattern is when we trade everything on a 5-minute chart. We also do it on a 3-minute chart. So in about 15 minutes, we actually need to observe. We need to re-examine the chart to see how it's trading and what formations are developing. However, many individuals don't typically do this. So over here, I've provided you with a kind of indication. The reason I've given this is that our main support area here is showing a doji pattern. It will clearly indicate what pattern is emerging in the 15-minute time frame. So if a doji pattern happens to show up in a support area, it essentially acts as a notification for you. Therefore, this particular location is what we consider to be the most significant spot. And this, without a doubt, is the absolute best feature of our custom indicator. So as I had already explained to you just a little while ago, I was referring to a mule, MDL. This is the specific line I mentioned. Understood? This you see is essentially an average mathematical calculation. This particular line will indicate a distinct level for us on a daily basis. This line will become visible precisely 15 minutes after the market has opened. And in a similar fashion, if you observe here, it will display our target percentage. You can clearly see the bull-driven control and the bear-driven control right here. So what this essentially means is when the market opens and trading is actively underway, the market will either be in a bullish phase or a bearish phase. But the crucial question is, whose control is it truly under? Is it the bulls who are in control, or is it the bears who are dominating? So to what precise extent have they managed to occupy and hold that position? So what is the percentage of that? I have mentioned that here. So do you see this side? Here 75.8, here 24.2, right? So this percentage, you see, I've indicated here the main thing, their holding capacity, their market control, whether bulls or bears are in control. All right. So whoever has the higher percentage, it means the market is completely under their control. That is their control. The percentage on this side, this shows how far they take their market. All right. So this is the percentage indicating how far they are pushing it. So what exactly is the difference between this one and that one? So this here is the percentage where the bulls are in control, and this is the percentage where the bears are in control. This shows the percentage of how much further they are taking it, and this indicates the percentage of how far they have already taken it. You see this target, don't you? The target is 80%. This changes depending on the prevailing market conditions. At times it might display 80, other times it could show 100, and sometimes it even goes up to 120. Suppose this indicates 80. If our market potential here now reaches 70, then a yellow warning will appear. An orange colored warning will come up if 70% is reached, because the market is only 80% controlled. So the market has reached 70%, and it will show an orange warning saying only 10% balance is left. Suppose the market still holds actually a significant amount of untapped potential. If they possess the necessary capabilities to fully exploit that, then this current percentage will certainly see an upgrade. It will then rise to the next level, reaching 90%, a full 100%, or even 110. For the market to be moved in this particular way, if either the bulls or the bears have sufficient potential, then this specific target will certainly change. And so as this target continues to undergo modifications, the market here will consistently keep following along. So at a certain point, if their energy levels become completely exhausted, then this whole thing will simply stop. If you look at what happened yesterday, we had our hero to zero moment. So regarding the Sensex, I have actually uploaded a separate video about this topic. So initially the percentage was around 80%. As the market progressed, you saw this peak moment went up to 90%, then 100, 110, and even 120%. So the Sensex was taken up to 120.4 yesterday. The pressure continued, and here the bears maintained their control and kept pushing. So this is the primary area of focus. And this 80% range, it will also align perfectly. So this 80% for us, this specific line, this very line will match. Okay. MUL and MDL will match up. Okay, so as the market continues to go down, this percentage will naturally increase. If you were to compare that 80%, it would almost perfectly match this. Now suppose this particular line won't change. Even if this percentage increases, this line will not change. This line will remain exactly where it is. But what will happen is the market will break this line and continue moving. If that particular line breaks and continues its upward movement, you are free to trade as much as it upgrades in terms of percentage. However, suppose it stops right there. If it upgrades further than this current level, then you must immediately exit your position. Because if it breaks from there, suppose it's at 80% and then breaks past 90, 100, or even 120, a reversal will occur. That's exactly what happened here yesterday. My MDL line stopped right here. I'll show you now. Yesterday, my MDL level was here. 80% of it was right here. So at this exact point, I decided to exit. Following that, it consolidated for a while and then broke out. This particular candle broke through. The very moment this candle broke, I took my next entry right here. So right after I entered, it just kept going for me, hitting 90, then 100, and even 120. So if you look at yesterday, it touched a low point right here, and then it finally exited. It reversed because my MDL line average, its average movement is only so much. Do you understand? Mathematically, its average move is designed to go only this far, let's say. So yesterday, they pushed it way beyond that, over exhausting it. So after it exhausted that, it then just came right back. The market turned bullish and the correct MD-MDL line has been reached. So that's what I'm saying here. Next, there's a hint action here. A hint action here gives a warning or something. Now, VIX is 22.8. You'll have an understanding of how the market is behaving. And this is extremely important. Breakout safety. Well, what exactly is this breakout safety? Suppose the market is making some kind of movement right now. If it's breaking through that particular point and continuing its upward trend, and if we had a normal condition prevailing at this very spot, then the breakout that occurs is absolutely correct and healthy. If we see a healthy normal pattern here, that indicates that the breakout is correct. This means you can confidently proceed with your trade. However, if we observe a high range here, you need to be a little more cautious because there's a significant possibility that it might hit your stop loss again, or alternatively, there's also a chance that it could consolidate. If you encounter a locked chop and there's a breakout, you must exit immediately, because what this means is that it will come right back and hit you hard. Just look at what happened today. This breakout, the 15-minute low breakout, for me, right at that exact spot, if you observe, it turned into a locked chop. So from there, after a brief consolidation, just look here at exactly 3 o'clock, it gave us a strong bullish candle. This is one safety point I mentioned, okay? Our indicator has a lot for safety. There are many features for safety. So please watch this carefully. I'm making this video again just for you. Okay, so we have already explained the market status table. So next up, if you take a look here, we have the alert strike table. What this alert strike table actually represents is essentially our spot chart. It's a spot chart, okay? So what we need right now is an option chart, and what that does is it will display the call and put charts for all three, Nifty, Bank Nifty, and Sensex right here for us. Understood? For instance, if a market that's currently in a downtrend is about to reverse and move into an uptrend, we must definitely refer to this particular chart. Now we need to observe this past standard pause. And this is also an important reference point. It was standard pause. And we must keep this in our minds. Pause. Sometimes what this is, it's a self-level. Suppose Nifty is a self-level. So the self-level, it has the possibility of moving from a high point down to a low point. Or conversely, it could also move from a low point up to a high point. That's why I've prepared this chart for you. It's simply meant to be a reference, so please keep that in mind. But what you primarily need to observe are Nifty, Bank Nifty, and Sensex. You should focus on whichever one you are actively trading. Sometimes what happens is that the option chart will move according to the Nifty or Sensex chart, or it might move based on Bank Nifty, or it could move based on Nifty itself. You should take all three charts, place them side by side, and then compare them thoroughly. You absolutely must compare both call and put options. Which one is the correct ORB match? You need to observe whether the low or the high is the correct match. What you should be looking at primarily is the first preference. You must always give that preference to Nifty. Second preference, you need to select Sensex. For your third preference, you must choose Bank Nifty. Please follow this order, but you must keep in mind that all these things move in a different way on a daily basis. The market will never be the same ever. So on one day, it will move based on the Nifty option chart. On another day, it will move based on the Sensex option chart. And on yet another day, it will move based on Bank Nifty. All right, I'll explain clearly. Listen carefully. So this is what it is. we have another calculation to perform. So based on that calculation, this particular strike price will be chosen and then displayed on our chart. This chart will be updated every night at 9 p.m. The market has closed for today. Tonight at 9 p.m. sharp, this chart right here will have its strike price updated to a new value. Consequently, its high, low, and closing prices will also be updated. Moving on, what else was mentioned in this? So our indicator contains all these. I've already told you about the features. So let's discuss the option chart and how it appears. So if I show you this right now, you can see the Nifty 2020-300 displayed here. The expiry date in this is extremely important. The expiry date, you might enter it incorrectly.
What won't come? Just take a look right here.
Take a look. It's showing the high, the close, and the low values. Do you see what I mean? All of these are considered plot levels. You enter the expiry date incorrectly, these levels won't show. These are the main levels. In our option chart, these levels are very important. If you don't update the expiry date incorrectly, this won't appear. Look at this, there's a lower here. Then after that, you'll see there's this high. This is high. So what we're looking at here is if you observe this previous low, this actually represents the chart's own self level. The previous day's high, low, and close for this particular chart, those are the levels we're talking about. Okay, and the previous high, low, and close of that specific chart, those are these current levels. But this high, this low, this previous high, and then this low, all these you see are actually another chart's high, low, and close market. This is exactly how it works. All right, directly, it has never really worked. It will always work only with some other reference. And today it's going to show you this. Just look, this is about the high, the low, and the close. It's not about its own specific value. But just observe how it actually works. So take a look at this. Now, the market today was supposed to break the ORB and move higher, but it came right back down. Does anyone here know the reason why it returned? If you observe closely, the 15-minute high this morning was broken at 9:30. After that, it broke through and came back inside. See? Do you know the reason for this? Just take a look over here. So in the morning, when the 15-minute high was broken here, it was broken here as well, right? But now look at this.
You're looking at this place, aren't you?
Is it that for this particular spot, it absolutely did not break here. So it came in, settled itself inside, and then reversed from that point. But after that, it did break. You see, it broke at various different time frames. So if you take a look, it broke right here. And so everything here is matching up perfectly. It's matching up here as well. There was a small break that occurred right here. However, despite that, it went back inside. So what we're going to be looking at next is our chart. There are buy and sell indications available. We also have a color code and a distinct color pattern. And there's the super trend and the moving average as well. Okay. If you observe this, just take a look here. You'll clearly see the color of this particular candle when all of them are in green color. And you can also see lime green, right? So this isn't just our charts. And then we've separately color coded high volume candlesticks. So if there's high volume, only a lime green candle will appear. If there's huge volume, it will have this diamond, this blue diamond icon. A lime green candle with this icon means huge volume. You might be asking how such a massive volume could have reversed. Look here, do you see a yellow warning triangle? So the breakout safety I mentioned, remember that breakout safety. So suppose our chart has a breakout, our indicator will validate that breakout. So after validating it and determining if it's correct or wrong, it will then identify that specific candle for us on the spot. As soon as that candle finishes, or when it's ending here, or even as this candle is just starting, or when 3 minutes are complete, it can appear at any moment. But this diamond icon will definitely show up. Suppose this turns out to be a trap candle. In that case, a triangle will appear right here. If a yellow warning triangle shows up, please, I urge you, do not take a trade. You should just exit out. Please take a look at this. What actually ended up happening was the candle then completely reverses its entire movement. All right, so this is one thing to consider. Secondly, we don't have our usual option chart. Instead, what we do have is the option flow, things like long unwinding and short covering. All of that will be displayed right here. So that's also something that's available to us, you see. Okay, now take a look at this. You'll see huge volume candles, for specifically lime green candles. On this side, you'll notice just a single candle. And on this side, we have green candles. These are, in fact, huge volume candles. So if you observe today, it's precisely the same situation everywhere. This candle, it broke today. It broke exactly at that specific point. And I did mention it would test lower, didn't I? But look, this low, yesterday's low, it touched precisely. And the 15-minute high and low are both located at the very same point. It came and touched that level. And from there, the market experienced a significant reversal, resulting in a truly super move from this specific point to that specific point. So this represents today's actual market movement. We have already explained to you what indicators we currently possess, correct? So how exactly should we approach taking a trade? We'll explain the process. What are all the available options? How can we enter and then exit our positions? So we're going to cover all of this. First thing, as soon as the market opens for 5 minutes, we'll identify the 5-minute high and the 15-minute low. You'll see a 15-minute high and a 5-minute low. Something similar to this will show up. Once it appears, targets will immediately come up on both sides. First, you must patiently wait for the 15-minute candle to completely finish once the 15-minute candle has successfully closed. The next thing you need to observe is whether the subsequent candle breaks the 15-minute high. If you simply take just the spot chart and analyze it, you can certainly place a trade just relying solely on the spot chart. However, there is absolutely no safety or protection for that approach, and I cannot personally guarantee its outcome or success. You must, at the very least, keep the Nifty call and put options available from this alert strike table. All right, if you take all three and examine them, that's best. If you take all three and compare them, that's best. So full-time traders, those who are constantly sitting and trading, definitely need to focus on these three: Nifty, Bank Nifty, and Sensex. Sensex currently has a 15-minute delay, right? If you happen to have the premium version, then Sensex won't have that delay for you. So what exactly can you do about Sensex then? Suppose there's a delay, you can go to your brokerage platform. Now, if you were to look at its call and put chart, it would display a low like this, and then it would show the close like this. But if you take the Sensex chart, it will show you something like this, close high. But today's will show you all the details. The previous PL is 3 days before the low and 3 days before the close high. This won't be needed much. These levels will work only occasionally. So this is why I have kept it here. Okay, but what you must importantly take note of is high, close, low. Previous high, previous low, previous close. You can easily monitor all these developments by simply updating the Sensex on your own brokerage application. So once you've set it up like this, the first condition is that it must break above the 15-minute mark, or it must break below the 15-minute mark. First, when these 15 minutes are completed, please check this market status table. The status will only update here after the 15 minutes have elapsed. Until then, the analysis will be displayed here. So what range is being indicated here? The most important thing you need to observe first is the ADX. Is it indicating a trending market here, or is it showing a choppy one? Here, it's clearly indicating a trending market, right? What exactly is the SMC indicating? Is it showing a range, or is it displaying a bias up or bias down? Let's say this indicates a range, but if the ADX is showing a clear trend, then you can consider entering a trade at a slightly lower point. However, if both of these indicators are showing a range, or if the ADX appears to be choppy, or if it's indicating an upward bias, then the primary thing you absolutely need to observe is the ADX. If the ADX indicator shows a clear trend, then you should definitely go for a trade. If the ADX indicates choppy market conditions, even with a breakout, do not initiate a trade. This is because a reversal is almost certainly going to occur. So at that time, even if you happen to enter a position, do not feel any regret. This approach is primarily for your own safety. The price will certainly move up for a bit, but then it will inevitably come back down. The ADX indicator is of paramount importance. So sometimes the volume here might be a bit low. That's not really a problem. ADX is very important. So for example, if ADX indicates a strong trend here, if you are looking to enter a trade immediately after the 15-minute candle closes, then this specific level must be broken. Specifically, the 15-minute high must be decisively broken. If it breaks, you should first aim for target 1. Your trade's initial target should always be target 1. Target 1. Whether it completely breaks through or just touches the line and then reverses, you don't need to observe or pay attention to anything at all. At target 1, you should exit straight away. Sometimes you'll find it right here. Other times you might see it over here, and sometimes it will be quite far away. So to wrap up, when there's some distance, you need to be careful because it won't go straight. It will go up a bit, then retest. That's how it will move. Right, when it's at this level, you can straight away take a trade up to target 1. Here, what you need to see is who is in control. Is there bull control? Is there bear control? We need to see who has the higher percentage. We need to check if there's a trend. We need to see who is in control. So we need to observe what percentage they have actually driven. So by looking at all these factors, you'll clearly understand the situation here. Sometimes the price will break past the first target, but even if it breaks through, that specific target will often retest. It will retest first and then it will move on. So you can definitely take your entry on the retest, understood, right? If you take that entry, then your primary target, your next target you'll see will be located right here. Sometimes if these levels like level 1 are ahead, you must be very careful because the market will touch the level and then reverse. If the market has a level before our target line, don't wait for it to reach the target. As soon as it reaches the level, exit. The market will reverse after it touches a certain level, right? Sometimes it might just go close to that level and then reverse from there. Anything can happen. So, okay, we need to be a little careful. At this point, we first mentioned our entry right here. We mentioned the high break. Where did we say the exit? We had mentioned this when it was at target 1, but here it reversed its direction, or alternatively, it consolidated. We must wait for the target to break through the 100% mark. It needs to break through the central point, not just breaking at the very edge of the range, placing it right at the candle's edge, then pushing another candle even higher. That is not a break. If it will continue that way, it will either form a candle above and then reverse. Or even if it keeps going, there is still the next level. It will go to that level, touch it, and then it will reverse. I'm moving on without hitting the target. We should set a candle and then come back. Otherwise, level 1 will simply reverse. They have successfully breached our primary target. We need to know the precise location of this breach because from that specific point, our secondary target will become available. So how many targets are we going to break? If we manage to break target 2, then the next target, number 3, will appear. However many targets he successfully breaks, that many targets will just keep on coming. It really doesn't matter how many targets there might be. Even if he manages to break 20 targets, up to 20 targets will still come here for me. On the day of the budget announcement, they arranged a Sunday special. On that day, I had a total of 12 targets that were sent to me. You see? So this is also there. Okay. So if target -1 breaks, the next target will automatically appear. But this is our maximum range. We need to match it with this percentage. This is the spot we can work on. So it's normal. Sometimes what you'll find is the midline. This one. So this line we're observing is the 15-minute midline. Currently, the market has already moved significantly higher. If RV doesn't break, what sometimes happens is it retests the 15-minute high and then moves further up. Therefore, the crucial condition here is that this 15-minute midline essentially serves as a median. This specific orange line, in essence, behaves exactly like a median.
So if it's above this level, the market is going to be bullish.
If it comes below this, it's bearish. Most of the time, it has worked out. Look, the midline came, retested, and then again, it couldn't go there. So from that point, it came back, broke this consolidated midline, then returned. And after that, it seems it hasn't broken it at all. Look, I knew it right at this spot.
We're not going further. We'll be back soon.
He went without a break, then came back, broke it again, and came right here. Look. So this is just like a median, this midline. Next, if you see, this is our condition. We've already mentioned that. We need to observe who is actually in control and what percentage of it they have driven. So how much further do we have to go? How far away is our target from us? We take a trade based on that, then find the exit point. Exactly this, 80% hasn't changed at all. We've already reached 70, 75 here. An exit, suppose the bull has come into control now. Let's say he's established about 70% control here. So if they've taken it to 40, 50%, if the market is at 80 here, you can take it up to 70, 75% or take it to 80K, no problem. But I'm saying this so that the safe exit can be ensured. So you can take it all the way up to 80%. You can trade the market up until that point. So you can try to compare that a little bit more physically. You can calculate it by considering the distance between your MU line and this particular percentage. So you can definitely use the target that's present there as your base point. Now, suppose if this particular point breaks, then your next target would have appeared somewhere around this specific location. So if there is a target, if a target appears before the MU line, then it is certainly better for you to exit at that target. Okay, so in the same way, if bears gain control, then the following condition applies. Now, the condition that I previously mentioned for the bulls will also be applicable to the bears. Okay, up until this point, I have been explaining the spot chart to you. Now, I will proceed to explain the option chart for you. How do we compare option charts? The option chart, for this, you should take three things: call, put, and spot, all three of them. Spot based on the strike price from our strike table. So what you know, what you mainly need to focus on here is the target. You should check ORB and high-low close. Meaning the high-low close here, you don't even need to consider. All this is just for show. The market has never respected this. It has never respected the self level. Sometimes, on most occasions, what the market truly respects are our specific high points. These close high levels and these cross plot levels are what the market genuinely pays attention to. So based on that, the market here today tried to move upwards. If you look at the ORB levels, you'll see that the ORB for call and put will match correctly. Did you notice? The put is matching right here. All right, puts correctly reversed from below, broke the ORB high, retested and came back. But just look at the spot. The spot would have gone up, then gone down, and then it would have come right here. There is something like this. Come here and look. You came here, broke it, and stopped it right here, didn't you? There's a candle right here. This is a green candle, but actually the color pattern shows red. You probably thought it would retest this level and then go back up again. But this particular candle broke right through it. See, this candle. So he broke through here and came down. Next, what we need to look at here is, do you know how to trade high-low close? If you know how to trade high-low close, it's very simple. We have a correct low break. The market is starting. If the price breaks a low now, it will typically move up to a high point and then consolidate. A low break usually indicates a high target. If the previous low is broken, then the previous high becomes the target. Similarly, if it breaks the previous low, that will be its designated target. Sometimes after breaking the current high, the previous high will then become the target and settle right there. And when it breaks the low, the previous low will provide you with the exact target point. When you compare the targets that are available on our spot chart with these specific high, low, and close values, you will truly discover a certain magic. I'm telling you this quite seriously. You'll get a really good feeling from it. So just take a look over here. Even if the high is broken here, even if it breaks, I already know that the market after such a big move is coming to test the low. Look closely. It touched the low point and then from there it completely reversed. So just observe this particular candle, this candle right here. It managed to break the previous high. When there's a strong break of the high, it forms a maroon candle. However, consider the very next candle. Just observe that specific candle. It went up, touched the level, and then simply came right back down. The next candle, after breaking the high again and moving higher, then came back down from there to touch the low. These are all such candles. We have clearly explained this using our indicator. So in this particular section, there's a warning, and then the diamond icon, the maroon candle, and the lime green candle. All of these things we have clearly explained to you. So there are normal buy signals and also sell signals available. You can take your entry based on the buy signal. For exiting, you can exit based on the specific targets I've mentioned and the conditions I've outlined. Okay, if you decide to exit based on the indications that are present here, you will almost certainly be exiting with a gain of 20 to 30 points. Always make sure to work with our target levels. So that's the best approach. This indicator, this buy sell signal is just an eyewash. A buy signal is only an okay confirmation. Sometimes a buy signal appears and the very next candle reverses it. Look at the example here. A buy signal has appeared, right? After the buy, the very next candle is a sell here. So many people would have entered at this particular point. But what exactly do we have here for us? You see the buy signal has appeared here, okay? And if you look closely at this very same candle here, a lime green candle with a diamond icon has now clearly shown up. This is a perfect huge volume candle. Take a look here.
It is indeed the same candle. Are you able to see the line?
See how the call path right here perfectly aligns and matches for you. If you look closely, there's a warning, a yellow warning. So what this yellow warning is, it's a trap candle. It's a warning telling you not to go any further. And just like that, you can see the trap right after completely reversed. It has already come down now. The buy sell indication is merely a deceptive eyewash. You should really focus on working with the levels. When you have such a technically detailed indicator like this available to you, you can certainly remain safe. You can keep yourself safe and avoid any potential losses. So that is extremely important to remember. As for this particular indicator, I believe I have explained it quite thoroughly and clearly. So the entry is a type entry. We can consider entering based on this high, low, and close. If the low breaks, then we can make an entry. So the target is this high. Let's fix it to that and proceed. No, if there's no spot chart, then as we discussed, we can proceed based on targets. You can take targets by considering our percentage. Regarding our alert strike table and its settings, we had previously mentioned that we need to update all the expiry dates. how do we go about doing that, and what other settings are available within our indicator. Let's just take a look at that now. So our indicator is located right here. So if you go into that, our settings will be right here. If you click on that, it will appear like this. Oh, look, you'll find some inputs here. What are the options available here? The very first option you'll see is Mobile View Compact. So what this means is, for some people, if you're trading on your mobile phone, this market status table will appear quite large and you won't be able to see the actual chart properly. So for that purpose, what I've actually done is, this is the mobile view that's available right here. If you click on this, you'll see it shrink down and become quite small. Did you notice that? So currently, there are two alert strike tables available. This one is present. Both of them will squeeze down, becoming small and compact for your convenience. Alternatively, if you have an alert setup and you've already pulled up and arranged all your charts, if you decide you don't need this particular reference at the moment, then you can simply uncheck the alert strike table option and it will disappear. See, it's gone now, isn't it? Now, if you don't need the table at this moment, then you can uncheck this and the market status will appear. It will be completely gone. Okay, so that's the specific option for that. So when you're using a normal PC, you won't really need the mobile view. You can keep it completely separate. Now, these orange Q bars, what they actually mean for us, look here, no trading. If there's a consultation happening, just look here. You see there's an orange colored box. It's shaped just like a box. So this here you see is a no trading box. So this is the status that goes with it. You can choose to keep this if you want, or you can simply discard it. I had previously mentioned option trading to you. Do you recall 3 days PPL, PPH, and PPC? So these are the plot levels for the third day. If you'd like to, you can certainly keep them. If not, then there's no need. You are free to remove them. Is that clear? So you shouldn't be touching this at all. This is the admins, but you must not change it. This here is our target percentage override option. All right. So you don't need to do anything with this particular setting. This is not relevant or connected to your current tasks. So the expiry date is what we must update right here. So for Nifty, it's the year, the month, and the date. And for Bank Nifty, the year, month, and date. Send 6-year month date. Please make sure you update the correct expiry date. This will then show you the high, low, and closing values. Right below this section, there is a crucial CP reference available. This particular reference is exclusively intended for you, the system administrator. In the event that this high-low close functionality does not operate as expected for me, I will utilize this for cross-verification purposes. Furthermore, if the high-low close on this option chart fails to perform, my sole recourse for cross-checking will be through the administrator. Do you understand? Therefore, I request that you refrain from making any alterations to this. After you've done all these updates and set the expiry, if you look here, you'll see default, right? And in this section, you'll find save as default. And what's another very important thing to remember? Now, once you have successfully installed this particular indicator, the very first thing you absolutely need to do next is, right after this indicator has been fully installed, you will clearly notice there are 3 small dots right here. If you go ahead and click on these 3 dots, you will see an option called visual order right here. Under this visual order option, please make sure to select bring to front. Okay, now I've kept this specifically for the chart pattern. Once you've set it up and then you click save, it will automatically save itself. So that's because we've given it a color pattern, you see, and it will look a bit neater for you. Otherwise, you'll find that the color pattern won't be clear. So the border will be in a different color. You'll have that kind of issue. And so that visual order is brought to the front for you. So you'll need to navigate to the 3 dots and then within the visual order menu, select bring to front. I have already made this selection and it is currently enabled. If you have any specific doubts about what I've just explained to you right now, you can always come and ask me in the comment section of my YouTube channel, or I've also provided the link to my Telegram channel right there in the comments. You can always reach out to me on the Telegram channel to ask for any clarifications. I am providing this specific indicator as a free trial to all of our subscribers. Please make sure to subscribe to our YouTube channel. Once you've subscribed, I will then provide you with the trial version. Go ahead and try using this trial version. Let me know your thoughts on how well it performs for you. If you have any doubts at all, you can always comment on my Telegram channel anytime. I'll be right here available. I will make sure to reply to all your comments. Have a safe trade. Have a profitable trade. Thank you so much.